So we've been looking at the stuff you sent over, really diving into these generational comparisons and how everyone's doing.
Mm-hmm.
And one piece really grabbed me, arguing that maybe the story we think we know about generations isn't quite right.
That's the one. The Economist piece, May 8th, 2025. Why Gen X is the real loser generation. It makes a pretty bold claim.
It really does.
You know, we hear so much about millennials, Gen Z, their struggles.
Right, the housing crisis, job markets.
Exactly. But this article says, hold on, maybe we should be looking more closely at Gen X. The folks born, what, 65 to 80?
Yeah. And it feels like they often get overlooked, doesn't it? Sort of the middle child generation.
That's a good way to put it. The article even points out, like, fewer Google searches, fewer podcasts.
Fewer memes, which is the real measure, obviously.
Right. I mean, the Douglas Coupland's book was huge back then, but since then, kind of quiet.
And it mentions that stat about Brits, Gen Xers in Britain, being less likely to even identify with the label Gen X.
Which is interesting in itself. It's like they're just there.
Yeah.
Under the radar.
So the idea is this invisibility might be hiding some real difficulties.
Precisely. And that's what we want to unpack in this deep dive, right?
Yeah.
Get into the reasons the Economist puts forward this pretty provocative idea about Gen X. Go beyond just saying they're overlooked.
Okay, let's do it. So first up, the article paints this picture of Gen X being at a tricky age, even calls them a cursed cohort. That sounds dramatic.
It does, but it's tied to where they are in life right now.
Yeah.
There's this Ipsos poll mentioned across 30 countries.
Okay.
And it found 31% of Gen Xers said they were not very happy or not happy at all.
Wow, 31%. Is that high compared to others?
It was the highest percentage of any generation in a poll. That's the kicker.
Okay, that definitely stands out. And this connects to the U-bend of life thing the article brings up. Tell me about that.
Yeah, the U-bend. It's this theory, basically, that happiness is higher when you're young, dips in middle age, and then goes back up when you're older, like a U-shape.
Right, I think I've heard of that. Midlife crisis territory.
Sort of, yeah. There's research. David Blanchflower did some,
Yeah.
linking unhappiness, anxiety, even despair, peaking around, age 50.
Which is right where Gen X is mostly.
Exactly. The article notes, boomers went through it, millennials have it coming.
But why might it be hitting Gen X particularly hard, according to this piece? Is it just turning 50?
It seems to be the combination of things happening at that age for them. The article mentions, like, chronic health issues starting to emerge. That's pretty standard for middle age, right?
Sure, things start creaking.
And also, maybe realizing, okay, maybe that corner office isn't happening, a sort of career plateau for some.
Ah, the reality check moment.
Okay, but the really big one they emphasize is the sandwich generation pressure.
Right, caught between kids and aging parents. How does that look specifically for Gen X?
It looks pretty intense. They're often supporting kids, maybe still at home, maybe young adults needing help and dealing with parents needing more care. Financially, the article cites U.S. data. Gen X spends about 5% of their budget on care for under 18s or over 65s.
Okay, 5%. How does that compare?
Well, boomers, only 2%. So it's more than double the share of their budget going towards care. That's significant.
That's a huge difference. And it's not just money, it's time, energy, emotional load.
Absolutely. And the article also mentioned the trend of young adults living at home longer. Italy, Spain, big increases.
And those parents are often Gen Xers.
That's the implication, yeah. Adding another layer of responsibility, maybe financial strain, it all piles up.
So they're really squeezed. The article uses San Francisco as an example, doesn't it? To show this U-bend thing being maybe more intense.
Yeah, it's a good case study, contrasting like the optimism of Gen Z there with the maybe relative security of older boomers.
And Gen X is stuck in the middle.
Pretty much. Lower happiness rates reported for Gen X in SF compared to Gen Z. And the practical stuff, like having to move out to Oakland because SF is just too expensive, it really highlights that feeling of being caught.
Okay, so that's the unhappy middle argument. Age, health, career stuff, and this major sandwich pressure. Got it. Then the article pivots to income growth. It says, yeah, they earn more than previous generations overall, but...
But the rate of improvement is slow. Really slow. That's the key point.
Slower than expected.
Yeah, historically, each generation tends to do better than the last, income-wise, after inflation. But for Gen X, that improvement was, smaller.
How much smaller?
They reference a U.S. study, Corinth and Larimore. It found Gen X's real household income around ages 36-40 was only 16% higher than the previous generation at that same age.
It's only 16%. Wow.
Yeah, and that was the smallest jump between generations they looked at.
That doesn't sound like much progress at all, especially when you think about how costs have gone up for everything.
Exactly. Housing, education.
So why the slowdown? Does the article suggest reasons? It mentions something about Gen X values, right? Work-life balance.
It touches on that, yeah. The stereotype, maybe backed by some studies, that Gen X wasn't maybe as keen on being, corporate drones, valued autonomy, balance more.
The whole slacker myth, but maybe with a kernel of truth about priorities.
Perhaps. They even mention films like The Matrix and Fight Club from '99.
Ah, right when Gen X was hitting its stride. Those definitely had an anti-establishment vibe.
They did. Now, whether that directly translates to slower income is debatable, but the article flirts it as a possible contributing factor. Maybe not chasing the latter quite as hard.
Interesting thought. But surely there were bigger economic forces at play, too. The article mentions the timing, right? Their prime earning years.
Oh, absolutely. Their 30s and 40s, typically your peak earning growth years, slammed right into the global financial crisis of 2007-09.
Oof. Terrible timing.
Yeah. Weak labor markets, wage stagnation. It hit hard.
Yeah.
The article gives examples. Britain in 2011, tiny nominal earnings growth. Italy, the Euro crisis impact. Canada, basically no real median earnings growth for 35, 44-year-olds for several years.
So major economic headwinds right when they should have been accelerating financially.
Exactly. A really tough period to build momentum.
Okay, so slower income progress due to maybe a mix of priorities and really bad economic luck, which then leads to wealth and home ownership.
Yeah.
And here the article throws another curveball, right? Challenging the usual narrative.
It does. You know the story. Boomers got rich off housing. Millennials can't afford a shed.
Right.
But this piece, citing Victoria Gregory from the St. Louis Fed, says the biggest drop in homeownership rates actually happened between boomers and Gen X.
Wait, not between Gen X and millennials?
Nope. Between boomers and Gen X. And it suggests Gen X's homeownership rates in their late 30s, early 40s were actually pretty similar to millennials at the same age.
That completely flips the script. Why the big drop from boomers to Gen X then?
Again, the financial crisis looms large. Getting a mortgage became way harder after 2008.
Tighter lending standards.
Exactly. Plus, foreclosures hit people hard, many of whom would have been Gen Xers trying to get established or build equity. The article jokes about the couple and, quote, buying a house means losing your personality.
Huh. Probably not the main reason.
Probably not, no. The economic reality was much tougher.
So, tougher time getting into housing. What about overall wealth? Did they manage to build wealth in other ways? Stocks, maybe?
Well, the timing wasn't great there either. Think about it. Boomers in their 30s had the booming '80s stock market. Millennials in their 30s have seen pretty strong returns recently, despite volatility.
And Gen X in their 30s and 40s.
They hit the 2000s, the lost decade for U.S. stocks after the dot-com bust, ending with the '08 crash. Just stagnant or declining markets right when they should have been in their prime wealth-building years.
Man, it really sounds like they hit a lot of economic potholes.
It does. And the aggregate data seems to bear that out. The article mentions Jeremy Horpedal's work, showing that the millennial Gen Z group had roughly double the wealth at age 31 compared to what the average Gen Xer had at that same age.
Double, that's huge.
It is. And there's suggestive data from the European Central Bank pointing to a similar pattern in Europe, too. Millennials in the Euro area saw their net worth grow much faster than Gen Xers did over the 2010s.
So slower income growth and lagging wealth accumulation, compared to both who came before and who came after at similar ages.
That seems to be the picture the data paints.
Okay, that's a lot. And just when you think it can't get worse, the article brings up retirement, pensions.
Yeah, the potential looming issue.
Yeah.
Broken pension systems, basically.
How so?
Well, it cites the projection for America's Social Security Fund, expected to be depleted around 2033.
2033, which is right when?
Right when the oldest Gen Xers start hitting retirement age?
Oh, fantastic timing. Again.
Tell me about it. And without congressional action, that could mean benefit cuts. The article mentions maybe 20-25%.
A quarter cut in expected benefits, just as they're supposed to retire. That's deeply worrying.
It absolutely is. Another potential hit for a generation that seems to have faced quite a few already.
So putting it all together, the unhappiness you've been hitting them hard with sandwich generation stress, the slower income climb, the wealth gap partly due to bad market timing and crises, the homeownership struggles, and now this potential pension crunch.
Yeah.
The article's conclusion is basically, maybe we should be worrying more about them.
That's the core message. Maybe it's Gen X, currently in their, 50s mostly,
Hmm.
who warrant more of our concern given this pileup of challenges.
It certainly reframes the whole generational debate, doesn't it?
It really does. It suggests that if you're looking for the generation facing a confluence of economic and well-being headwinds right now, maybe it's them.
It really makes you think. If you have a whole generation hitting their later working years and heading towards retirement, facing these kinds of multifaceted pressures, what does that mean for society overall? Do we need to rethink how we view generational winners and losers, and maybe how we support people in midlife?
That's the big question, isn't it? What are the broader implications? It impacts everything: the economy, healthcare demands, social safety nets, even just general social cohesion. It definitely pushes you to look beyond the usual narratives.